right, what's up everyone? Welcome to a very, very frigid, windy, and cold New York City. It's definitely going to be a windy and snowy one. I'm definitely getting reacclimated to the temperatures here. You know, I honestly thought this was a real security guard for a second. Pretty interesting. Anyway, we'll get started here in a minute. It's good to see everybody again. Hopefully you all are doing well. And we're reporting live from our usual spot from East 56th Street and Park Avenue. So, hope everybody is well. Current temperature in New York City is about 23 degrees Fahrenheit. However, with the wind chill, it feels like 10 degrees. The wind chill factor is supposed to get the temperature down to about 7 degrees tonight. This is probably one of the coldest winters I could remember in New York City in a long, long time. So we'll just have to rough it out until the spring. But it's good to be back, and it's good to see all of you. So we'll get started in a minute. Michelle Henry, what's going on? Alan, Middle Age Grind, Professor Dario. Hopefully you've been well. I see Lance. Wow, Jess says it was -5 in Dallas this morning with the wind chill. Jeez. Terrible. Terrible, terrible stuff. Monday, we'll talk about it. We'll talk about American Express and Gemini. You know, in terms of the credit card and banking business, we have a pretty big merger that is probably set to go through now, Capital One and Discover. We'll talk about that. Now, one of the things we did talk about with this new incoming administration, one of the things that we've been speculating about is it's probably going to be a pretty big boom on Wall Street in terms of the M&A business, right? Trump is a deal maker. A lot of the people in his administration are deal makers. So I think it's going to be a pretty good 4 years for anybody in investment banking, particularly if you're a merger banker, right, or a merger lawyer. So, yeah, Discover and Capital One, that should be quite interesting. We'll talk about it a little bit. Arctic Paratrooper, good to see you. Welcome back to New York. I feel like we've been gone over a month, but I think it's only been like 13 days. Anyway, Luke, good to see you. Thanks so much for joining. Luke from Sunny Isles Beach. Definitely wish I was in Sunny Isles right now, but no cigar. We are here. Daryl, what's going on? DC322, yeah, we'll talk about that as well. The tariff talk. Definitely been a little bit of craziness. Now, I'm mostly intrigued in terms of the tariff talk as it relates to semiconductors. Now, we were away, so we weren't able to cover it, but the CEO of NVIDIA, Jensen, had a meeting with Trump. I think that was on the 31st. Maybe it was I forget. I think it was on the 31st of January. Jensen was meeting with President Trump. And now 2 days ago, Trump came out, as Trump does, and says, you know, we're thinking about 25% tariffs on semiconductors and chips. I don't think you'll see a lot of headway with tariffs on the semiconductor sector, and we'll talk about why. But give me 1 second, we'll get started. Cal Reevy, thank you so much. Let me just try to do something here. Bear with me. All right. You know, I guess I'll just do the quick audio and visual check, and then we'll go ahead and get started. So if you guys can hear us, and if we're streaming in 1080p, just go ahead and leave a thumbs up in the chat, and we'll go ahead and get started. Now, I do think that there's a pretty big hockey game going on, Canada and the United States. which is also pretty exciting. So unfortunately, I'm going to be missing that because I'm going to be doing the stream, but I will watch the highlights. Tatted Tea, what's going on? Alan, what's up? Vinny says the 51st state leads 1-0. Now it's interesting because Canada scored the first goal in the last game, right? Anyway, Cameron, thank you so much for your $10 donation. This is Tom. How was the flight? How long is the flight from South Korea to New York City? Yeah, so it's a really good question. I guess we'll just jump right into it. Maybe I'll make it a shorter than normal stream because I'm not sure if you guys could tell, but the wind tonight, it's insane and it's freezing. It feels like 10 degrees out. So maybe we'll just go on for an hour. But yeah, so the flight to Korea is a little bit longer than the flight back. I guess it's because of the jet stream per se. But it's roughly a 15-hour flight from New York City to Seoul, and then from Seoul or Incheon Airport to New York City, I think it's about 13 and a half hours. So it's not bad. This is my fourth time doing the flight, right? So once there, once back, once there, once back. And I think I'm getting used to it, honestly. The jet lag is not too bad going to Korea, but for some reason, the jet lag coming back, it's been a little crazy this time, like a lot of brain fog, but that's probably just because it's freezing here. But yeah, it was a really good trip. I was in South Korea for, I don't know, a little over a week, and it's just a really, really great place. And they are very, very, I think the biggest takeaway from a business standpoint is they're a very tech-focused society. They are a digital-focused society, and very, very big on cryptocurrencies. So, but it's a good question. It was a really good flight. Oh, by the way, before I forget, if anybody is thinking about doing some international travel, particularly to Asia, I tried out this airline. I guess it's pretty new. It's called Air Premia. I believe it's a subsidiary of one of the other major airlines, but it's very, very affordable. There's only economy class and business class, and the flights are very cheap. So I got a round-trip ticket for, I think, $950, which isn't bad because if you think about doing a round trip on Air Korea or like Asiana Airlines, it's probably going to be $1,600, $1,800. So if anybody is interested in trying out a new airline, it's actually pretty good. The planes are brand new. I think the airline is only like 4 or 5 years old. So check it out. It's called Air Premia. Well, anyway, good evening, everybody, and welcome back to Walks in Wall Street. Today is February 20th, I think, 2025. It's about 25 degrees here in New York City, but with the wind chill, it feels like 10 degrees. There's been a lot of craziness going on in the markets that we have yet to talk about because we've been away. We've been on a little bit of a hiatus over the past 2 weeks, but I think there's a lot of opportunity in the market. We have gold, I think, is going to hit my target of $3,000 sooner rather than later. We are now above, I think, $29.50 for an ounce of gold right now. I wouldn't be surprised by the end of March we have a 3 handle on gold. So $3,000 gold is coming sooner rather than later. Oh my gosh, that wind is crazy. I don't know if you guys could tell, but the wind is actually shaking the camera. That's how windy it is here on Fifth Avenue. So not only is gold, the physical gold, performing well, but also the digital gold. right? Bitcoin is holding well above $98,000. And I think those are really the two spots that investors should be in. We've written about this many times and talked about it many times. The gold, physical gold and digital gold are really acting as a hedge due to all of the uncertainty, right? Whether we like it or not, the Trump administration, with all of these negotiations and tariff talks and fighting, it gives investors a lot of uncertainty. And that is, not the best for investors short term. I think long term, a lot of this stuff is going to pay off, but you're going to need to stomach short term higher volatility than you're used to. Now, I kind of want to get through a lot here, so I'll just kind of ramble on about the most important things that are on my mind. Now, before I left to Asia, the biggest piece of news was DeepSeek, right? The Chinese AI company that was founded by the Chinese hedge fund really took the tech world by storm. And, my opinion on it, particularly early on, and I've voiced it many times here on the broadcast, is that I wouldn't believe everything that's coming out of China. And now that about 2 weeks have gone by, I think it's safe to say that DeepSeek is a great product. I use it. But in terms of the amount of CapEx spending used to create this product, I think it was a little bit embellished, right? All of the experts are pretty much nudging that it didn't cost $6 million to create this. Now, they said it without saying it, and here's what I mean by that. I wrote down an interesting statistic. It came out in the journal today. It was in relation to Meta, so Mark Zuckerberg's company. It was also in relation to Microsoft. And lastly, it was in relation to Alphabet with their Google AI. So this year in 2025, those three tech companies combined are set to spend about $200 billion on AI. Now, to put this into further context, that's about a fourth of their revenue, okay, that they're going to be using as CapEx spending on AI infrastructure. So, again, the reason why that's important is because when we first found out about that DeepSeek news, right, and everybody was freaking out about it, you were reading these really kind of crazy articles in Seeking Alpha and what's the other one, Zero Hedge. There was a bunch of crazy tweets about how, semiconductor companies like NVIDIA and the like are really going to, half in valuation. It's going to be the end of big tech in America because DeepSeek proved that you don't have to have all of this ridiculous spending to build a good AI product. Now, my thought process here is that as it stands, as we just reviewed, Zuckerberg, Microsoft, and Alphabet, even after all the DeepSeek news, they've reiterated that they're going to spend about a fourth of their revenue on AI, including chips, data centers, and the like, amounting to about $200 billion. So that tells me that there's probably more to this DeepSeek story than meets the eye. And I wouldn't be too, let's just say, quick to dismiss the dominance of big U.S. tech. Hey, Matthew, what's going on? Good to see you. Patrice 2020, thanks so much for joining us. TK Porsches' big sell-off today in Palantir. Start of a big correction or another run. Well, look, I mean, a lot of the TMLs that we talk about are very, very extended. I mean, the runs that a lot of these companies have made have been unbelievable. I mean, if you look at the extension over, the 50-day and 200-day moving average, Palantir is a perfect example of a stock that is broken out with force from a stage 1 IPO base. So, in my view, Palantir has completed its stage 1 ascent right? The stock is up hundreds of percent, and it's normal to go into a correction period and maybe go all the way down to the 200-day. That is 100% in play. Hey, New England Crypto, what's going on? Good to see you. Since I've been gone, we've also had a lot of Bitcoin and crypto news, which has been quite exciting. We now have major sovereign wealth funds with multiple tens, if not hundreds of millions of dollars worth of Bitcoin exposure. And I think that's only going to continue. So, as I say, follow the money there. It's one step at a time. The institutional adoption is coming. And as sovereign wealth funds continue to gain exposure, I think that's going to put what I should say a pretty type of bid under the market. And I think you'll see 110,000, 115,000 in play this quarter. TD, what's going on? Cheers. Thanks for joining us. We're just going to cross to the south side here by St. Thomas Church. Now, another company that reported earnings today was Walmart. And this is a company that I always say, the stock is down, I think, 7% today. But that's just because Walmart is extremely extended. That's been one of the TMLs for 2024. And I've made this kind of comparison. If you've ever watched Mad Money with Jim Cramer, he always talks about Apple, and he says, Apple's one of those companies that you don't trade, you just own it. I have that same feeling I've had for a very long time, that same feeling about Walmart. And I've talked about this thesis here, almost to the point of ad nauseum. And my biggest bull thesis for Walmart in particular is the moat. And we are living in the age of convenience. And I've always said, the companies that are going to win and that are going to win big, or bigly, as Trump would say now that he's the president, are going to be the companies that can provide the American consumer with unbelievably, almost like ridiculous levels of convenience. And I was on the earnings call today, and the CFO of Walmart said something that really stuck out to me. And I'll kind of paraphrase here. Number one, he said that they're growing market share the fastest in high-end consumers. So consumers with a household income of $150,000 plus now are choosing to shop at Walmart more often. That is taking market share away from places like Whole Foods. And we've talked about this, how if you've gone into a Walmart store and you've compared your experience going into a Walmart store, say today or yesterday, to that experience, I don't know, maybe 7 years ago, totally different experience, right? Walmart kind of has had that meme for the last, decade plus, how Walmart is kind of cheap products, low end, you're not really going to go food shopping or grocery shopping at Walmart. That's done a complete 180. And many of you may agree, many of you may disagree, but at least the Walmarts that I frequent in Miami Beach and out on Long Island, they have great produce. They have great fresh food. And that is starting to resonate with higher income consumers. Now, additionally, the number one segment of growth in Walmart this quarter has been their e-commerce business, right? If you can win in e-commerce, you are going to win at this game because that is convenience. I wrote down a little bit of an excerpt from the call. I think it'd be important to read it for all of you. So in terms of net income, just profitability, right? Walmart made about $5.49 billion this quarter. They're growing the fastest in the upper income households, $150,000 plus income. And Walmart is able to serve 93% of Americans same day. And we've spoken about this before again, to kind of reiterate. Walmart has probably the most impressive 3PL logistics setup of any company in the United States, which means you're not going to be able to compete with them. They could do same-day delivery. They could do same-day order online, in-store pickup. And to reiterate again, not to sound like a broken record, but the businesses and the companies who are going to win the most in this new age is going to be the companies that can provide the utmost convenience. Can you deliver it? Can I order it on my phone? And can I have the products at my house when I get home from work? And there's only two companies that could do that in terms of the grocery kind of sector of the market, in my view. Number one, that is Walmart, and number two, it is Whole Foods, right? Because they have the backing of Amazon. I'll stop there real quick. Any thoughts on that? Any disagreements on that? I think Walmart is going to continue to be a powerhouse. And if you haven't listened to that earnings call, you could do so by going to the investor relations page on Walmart's website. Hey, Robert, what's going on? Jonathan says I'm a Walmart Plus member. So what does a Walmart Plus member mean? Because I think I'm going to sign up to become a Walmart Plus member. And the reason why I say that is I got an email from one of my credit card companies saying that they get a free Walmart Plus membership, and all I have to do is enroll. So maybe I'll do that. Running at altitudes as I am noticing more Walmart delivery trucks here in my neighborhood. Ren 1018 says Walmart still has a long way to go. Chinatown Bus says high-end consumers are pinched by inflation too and trading down to Walmart. That's an interesting way to look at it. It's an interesting frame. So perhaps you're saying instead of higher-end consumers choosing Walmart because they like it, maybe they're choosing it because they have no other choice and they're trading down. Maybe, possibly. Vista Tiger says, I get my Target deliveries very quickly, and there is no Target in my small town. Target's been one of those stocks that's really, really suffered. Ticker symbol TGT. I think the reason why Target has suffered is because they really don't have that big of a robust produce section. Anyway, here's St. Patrick's Cathedral, looking beautiful as always. God bless everybody, you know what I'm saying? Peter says Walmart prices beat Costco. That's pretty impressive if that's true. I'm going to take your word for it. Costco also has an unbelievable business model. And the reason why I say that is because Costco is the original SaaS subscription-based service, if you think about it, right? Selling memberships and being able to increase prices of those memberships across hundreds of thousands of members. Hey, Michelle K. Thanks for joining us. Welcome to a very snowy New York City. Ryan says, Tom, how about Sam's Club and Costco? Costco seems to have a high PE. Oops. Ryan says Costco seems to have a high PE ratio, though. That's actually good. This always kind of brings me back to this analogy, and there's a really good video on YouTube. It's an old Peter Lynch presentation, if you will. Now, for those of you who don't know who Peter Lynch is, he was the former mutual fund manager of the Fidelity's Magellan Fund, arguably one of the greatest mutual fund managers of all time. And the quote that resonates with me the most is that stocks are cheap for a reason, and stocks are expensive for a reason, right? So if you come to New York City, you travel here, and you want to stay at the Park Hyatt New York on 57th Street, with the really nice view of Central Park, Michelin star chef in the building, saltwater swimming pool, it's going to be expensive. You're going to pay $1,000 a night. But you could also stay in a pretty, you could stay in a hole, right? You could stay in a very sketchy, what are those places? The hostels, they're called? It'll have roaches and rats crawling all over the place, and it'll be $50 a night, but you'll have little roaches and critters crawling over your legs at night. Things are cheap for a reason, and things are expensive for a reason, right? You want the saltwater swimming pool, you want the Michelin star chef, you're gonna have to pay up. If you want the rats and roaches, well, you got to scrape the bottom of the barrel. It's the same thing with stocks, right? Wall Street and investors are willing to pay a premium for predictable earnings and strong earnings and revenue growth. You know, if you have a company or stock XYZ that the last 6 to 8 quarters, they've beaten their earnings expectations, they've beaten their revenue expectations, and they've guided higher, well, that stock is probably going to trade at a premium, right, to price to sales, price to earnings, right, price to book, whatever kind of metric you want to evaluate that company on. It's probably going to be pretty expensive. So all of the TMLs, the true market leading stocks, they're never going to be cheap. You're never going to get them for cheap. But it's a good point. Anyway, welcome to Rockefeller Center. Now, Rockefeller Center looks nice, like it looks absolutely beautiful here. But I don't know about you guys, I'm over the winter. I think these people are probably going to be ice skating until maybe mid-March. Who knows, if the weather keeps up like it is, perhaps we'll have ice skaters in April. Never know. I mean, it looks great, but cat lovers here. Caleb, welcome. Hopefully you're well. Sally, cheers. Marcia says the memberships are crazy. I would never buy a membership. I do not shop there. Very plain, boring store, not my style. Very basic. Yeah, when you walk into a Costco or, you know, BJ's or Sam's Club, it's definitely not, I would say, aesthetically pleasing. You know, the aesthetically pleasing stores would be like a Whole Foods, right? A Target. It's probably a little bit more pretty, I guess. This is looking at 30 Rockefeller Center here. Not sure if you can see it, but if you look closely, you have snow falling here. So, looks like the wind has calmed down at least a little bit. We'll go back and head up by Saks Fifth Avenue. We'll go up here and make a left and head by Radio City Music Hall. Oh, and in other news, Bill Ackman made an offer for Howard Hughes Corporation. I'm not sure if anybody listened to his live presentation. I think this was yesterday at about 9 a.m. Pershing Square and Ackman, Mr. Bill Ackman, made a presentation to investors, public presentation, about his offer for Howard Hughes. Now, the goal of the acquisition is to build a modern-day Berkshire Hathaway. Should be pretty interesting to see how that plays out. Now, I think the biggest critique a lot of people have been making is the maybe steep management fee that they're going to be charging, about 1.5%. That was kind of the talk on X platform. I haven't really done too much diligence in it, but over the weekend I'm going to take some time and listen to the presentation. We're headed towards Avenue of the Americas now. You're going to see the Rainbow Room, Radio City Music Hall to your right. We'll kind of blow through these topics fast tonight because it is frigid cold. For those of you who are just joining, it's about 25 degrees in New York City, but with the wind chill, it feels like 10 degrees out. Now, another big topic that is very important to keep on the radar is China. A lot of Chinese equities are kind of making their second leg higher, and they're performing really, really well. Alibaba had a great day, and also a great earnings report, by the way. You had Futu, ticker symbol FUTU, performing really well. That stock looks like it's going to break out. And just the Hang Seng in general looks good. Now, to take that kind of conversation one step further, kind of stretching further across the globe, a lot of emerging markets are rallying. If you want to kind of get into the weeds, what's going on in Eastern Europe with the war between Russia and Ukraine, now stock prices kind of can act as a leading indicator. Perhaps we can use Russian equities and some European equities as maybe a little bit of a leading indicator that this war, hopefully, is going to end pretty soon. You're starting to see, maybe a front running of this. So as equities rally, they usually lead by about 6 months. So perhaps these newfound talks between the United States and Russia are going to result in some sort of a resolution. However, as you all know too well, I am not an expert when it comes to geopolitical events. This is not my area of expertise, but we can only hope, right? Maybe follow the price action, and perhaps we get some positive news and the war between Russia and Ukraine will end. Let me just try to do one thing here.
Just go out.
I had to put my hands in my pockets for a second. Let's check out the line for Adele's Famous. Now, in terms of the financial markets and the war between Russia and Ukraine, at the very, very beginning of the war, many people were expecting the prices of commodities, particularly wheat, to really go through the roof and, become so unaffordable that it would cause massive famine. And that really hasn't played out. 2 months after the war started, the price of wheat actually kind of cratered and came down and kind of stabilized and moderated. And it just kind of goes to show that, consensus view is usually wrong. In this case, thank God it was wrong, right? If consensus view was right, you would see, what was predicted, which would be mass famine and people starving to death, which is horrible. So it's very good that economic trend reversed, just to put it lightly. Bree Grams, what's going on? Thanks for joining. We're going to be walking down to Grand Central Station tonight. We're now outside of the News Corporation building. Speaking of Ukraine, better move fast to negotiate an end to Russia's invasion or risk not having a country to lead. Very harsh threats. it's going to be interesting to see how this plays out, because obviously Zelensky is very adamant about saying, look, they don't want to relinquish or give up any land, which is totally understandable. And I'm not too sure if Putin is just going to roll over and say, yeah, let's end the war with, no concessions and we're just going to pull out. So it's going to be interesting to see how that plays out. Hey, Dan Sang, what's going on? This is how is Korea? Korea was awesome. I think you were in China not too long ago, right? But Korea was amazing. It was very, very fun. And it was cold, but not as cold as New York. It was snowing almost every single day when I was in Seoul. It was snowing usually at night. It would start at like 9 p.m., end at like 5 a.m., and then pick back up again a little bit at like 1 p.m. But it was very cold, but it was very, very fun. Really good trip. I really want to be able to make it to Japan and then Singapore. Those are my two up next stops on the list. But I have yet to be able to find the time to be able to get there. So now, if anybody takes a trip to Seoul, I think one of the coolest things I saw when I was there was this really, really beautiful palace. I'm trying to remember the name of it. I think it was the Gyeongbokgung Palace. And that is the site where the really Korean language, or the Hangul as they call it, was created. It was really, really interesting to see. And the palace dates back to, I think, 1395, so the late 1300s. That's probably one of the most remarkable things about the city and just Korea in general, because you have all these modern skyscrapers, modern subways, really modern infrastructure, and all mixed in with that is like really, really old and historic buildings, and it's very, very unique. Hey, what's up, Hank P? Good to see you. Hopefully you're doing well. But if you guys are enjoying the live stream tonight, feel free to leave a like on the video and click the subscribe button if you're new. We usually do these walks roughly every day, starting at 8:45. You can see the Empire State Building in the distance there a little bit. Lee says, I'm in Seoul right now. Very jealous. Seoul was really fun. Lots of fun. I was really all over. I was in Osan, near the Osan Air Base. I spent some time there. Then I was up near the Seoul National University Hospital, which is a really cool area. Where else was I? I spent a lot of time in Suwon as well, which was cool. Wow, looks like there's a cool event going on in there. of Jonathan's as you go into Southwest Florida this weekend. Fort Myers. Love that. I should be back in Miami March 11th. I should be spending about 3 weeks down in South Florida at that time, so we'll see. Hopefully it was a little bit earlier. Oh, you know what's one trend that I wanted to bring up, and we brought this up before. Just kind of trying to find some interesting thematic investments now that a lot of these different sectors are starting to correct a lot. I'm still overall kind of very intrigued and very bullish on the trend in the United States, specifically of people. I like to call the trend the humanization of pets. I think that is going to be a very, very strong bull cycle. I mean, some people, right, and I'm not saying it's good or bad, but treat their pets like it's their children, and they spend a lot of money, and there's been a lot of research done. I was reading this KPMG study. I'll try to link it in the description when we end the live stream, but if you look at as a percentage of household spending on pets, it's absolutely exploded since the pandemic, and we really haven't had a tailing off, so to speak. We haven't really had that come down. So I think a lot of, all natural pet foods, that sector is very intriguing to me. I know there's a few publicly traded companies that prices should be attractive enough to maybe get involved in that soon. So I would pay close attention to the overall pet market in the U.S. I like to call the humanization of pets, so to speak. Hey Shane, thank you so much for your $2 donation. Lower Manhattan is in the distance, and you can see the spire of the One World Trade Center. Now we're currently on the corner of 42nd Street and 6th Avenue. We're standing across the street from Bryant Park, as well as Salesforce Tower, which is another stock that's been performing rather well. Salesforce Enterprise Software Company, ticker symbol CRM. And we are also by Bank of America Tower, too. I think Bank of America, Goldman Sachs, JP Morgan Chase, which there's been a lot of news about JP Morgan Chase, but I think those are all poised to do really well over the next 4 years as investment banking activity like mergers and acquisitions really start to boom. I'm not sure if anybody saw this, but there was a leaked audio from kind of like a town hall style event of Jamie Dimon really laying into his employees about work from home. Now the story goes that there was a couple thousand JP Morgan employees that signed the petition to say we want to work from home. We don't want to go back to the office 5 days a week. And Jamie Dimon pretty much exploded on the company and said, I don't care how many people signed the petition, you're going to come back to the office or you could hit the bricks, pretty much. And I mean, a lot of people who work at JP Morgan Chase, they're pretty smart people, right? They're making pretty good money, particularly if, I'm talking about, the investment bankers, right? So I don't understand why they didn't use the rule that never fails us, ever. And I talk about this a lot. The rule is follow the money, okay? If you haven't noticed, which we're actually going to walk to right now, all the way over there on Park Avenue, there's this mega structure called 270 Park Avenue, and it costs roughly $3 billion to build. And that is going to be the brand new headquarters of JP Morgan Chase. And this has been in construction for 4 years. So JP Morgan Chase isn't going to go into a deal that costs $3 billion to build a new office tower to have everybody work from home. I mean, once that thing opens, that thing is going to be filled to the rafters. So follow the money. If Jamie Dimon and company are going to invest billions of dollars, right, on a brand new super tall office tower on Park Avenue, you're probably going to have to go back to the office at some point, right? I'm not the smartest guy in the world, but I mean, if my CEO of the company I was working for is building a mega structure, one of the probably most technologically and modern mega structures New York City has seen in quite some time, I would say, well, I'm probably going to have to go back in the office and work in there at some point. So, yeah, I think people are going to have to go back to work. And I'm not saying that's a good thing, not saying that's a bad thing. I'm just saying that I think this trend overall of remote work is dead for client-facing and team work, so to speak. Right? If you're an investment banker, if you're working a live deal, it's probably better that you're in the office collaborating with your coworkers. It's probably a lot harder to do that type of work from home. If you're a salesperson, maybe you're selling enterprise software, probably a little bit difficult to do that from home. If you're pitching big companies, you're getting ready, practicing your pitch, practicing your presentations, a lot of that is probably going to move back to the office. Now, another thing that I would say the return to office work is doing is kind of managing people out of the business. And again, I want to reiterate, this isn't my personal opinion about it. I'm just saying, I'm not saying this is a good thing, I'm not saying this is a bad thing, but corporations do this, right? If you are a remote worker at Amazon, oh, look at that rat. Not sure if you saw that. There he is, let's see. He just scurried across the snow. Anyway, if you're an employee at Amazon, and if you're working remote, and Bezos is, well, obviously not Bezos now, but Andy Jassy is like, we really need to reduce our overall headcount by about 10%. Now, an easy way to do that would be to mandate everybody to come back to the office because you're going to get some turnover, right? Because, people moved away, they bought houses, they had kids, they can't come back to the office because, they would have to pay for childcare or move closer to the office or whatnot. So you're going to get some natural churn, you're going to get some natural turnover, and that's kind of what I like to call corporations like managing you out of the business. They expect and they want some people to quit, so to speak. And I think you're going to see that trend accelerate here. As a quick checkup, I mean, many of you, if not all of you, if you're not retired, probably maybe work remote, work at the office. What are you seeing in your neck of the woods? Are you seeing a big push from the higher ups and from your boss to come back to the office? Or is it kind of business as usual with the whole work remote stuff? Kind of what are you guys seeing out in the world as we pass the beautiful Bryant Park Grill? Shane, thank you so much for your donation. Yes, we can see the H&M building. We'll see it in just a moment. Joel PM says working from an office is not natural. That's why humans find it dreadful. Yeah, sitting under the beautiful fluorescent lighting, right? Dennis Kim says hybrid at Goldman. Mondays is still a decent hybrid approach, which I appreciate. Running at altitudes as I am more productive working remote. Office work has too much drama. That's a really good point. I think it really just all depends on the person, right? I mean, if you are super productive at home, if there's a way for the organization to check that, then I think it's probably most appropriate to just work from home. They still have the Winter Village up here. Here you could see Salesforce Tower, you could see the H&M building, and you could also see Bank of America Tower. NBA Elias. This is Tom. Surprisingly, I get a lot of work done on an airplane during flights. Laptop is great for that. It's like kind of like a hit or miss for me. Sometimes I have energy to work on the plane. Sometimes I just try to sleep. But that's awesome that you're able to get work done on flights. That's like a superpower to be able to do that. That's amazing. Now, NBA Elias, question for you and question for the audience here as we bang a right towards Grand Central Station. Doge. Elon Musk and team with their Doge. The question is the following, and I guess I'll preface this a little bit. There's been tons of controversy about Doge, right? I think from both sides. I think there's so much controversy with it that I myself don't even really know what's true, what's not true, what's fabricated, what's being gaslit or whatnot. One post says that we're saving at $2 billion. The next post says, no, we're not. We're actually not saving anything. So I'm at the point with Doge that I don't even know what's true or not. And I think we're in the fog of war phase for a month. We're not going to know what's actually being saved with the Department of Government Efficiency probably for about a month until we can get the actual totals. Because if you're on, if you read one article from CNN or one article from the Financial Times, an article from the Wall Street Journal, or just spend some time on X, the conflicting statements is insane. I don't know, maybe you guys are smart enough to figure that out. Question is this. The Trump administration, President Trump, came on and said, Doge this is the best thing ever. It's going so well that we're thinking about returning 20% of the savings to Americans in the form of a dividend, right? Giving $5,000 to every American. When I heard that, I was like, this is really ridiculous, right? The concept of Doge, right, that it was pitched to us, right? And now again, it's not for certain. President Trump said we're thinking about the idea. But when this was pitched, right, to the American people, the Department of Government Efficiency, it was to cut spending, cut, what I was about to say, corporate bloat, government bloat, reduce spending, and pay down the deficit. It wasn't to create a social, welfare program, okay? Because these are not savings. I think it's important for people to realize that. When Doge, if and when they start cutting and saving us money, I'm trying to figure out a way to rephrase this. It's not saving us money because we're spending it on nonsense. Does that make sense? So these are taxpayer dollars. So giving everybody $5,000 of saved money is not giving us any money at all, right? The whole premise of this was to pay off the debt, right? To pay down the debt, because in the year 2026, the largest line item expense is going to be interest on our debt. That is going to be the biggest line item expense for the United States, is just the interest on the debt. So I am very against this idea. Now again, it's just an idea of giving $5,000 checks to Americans because we save so much money. Because again, remember the frame here. This is very important to understand framing and persuasion. What I think Trump is doing and what I think Elon is doing, and then I'm going to read the comments in the chats. They've gotten so much blowback from this, right? Laying so many people off, taking such drastic action that there's so much blowback from the left that they're trying to buy admiration with $5,000. Right? If you wave $5,000 in front of someone's face, they're going to take it and they're going to love you. But what they don't realize is that it's going to bite you in the ass 8 to 10 months down the line, just like what happened with the COVID scam, right? We all know the whole COVID thing was a total fraud. We all know that the stimulus checks were not stimulus checks, right? The stimulus checks is what caused all of the inflation. Sending everybody money, blasting liquidity all over the place. That's why you had CPI rip to 9.1% and muddle around, 6 to 5% inflation, right? When you print a bunch of money and just hand out money to people, that is going to be inflationary. So if and when, right, this is a big if, the Doge dividends do come out, and Elon and Trump start sending people $5,000, you're going to see CPI rip to like 5 or 6% again. Okay, if you think eggs are $10 now, they're going to be 20. So hopefully, nobody takes the bait on this kind of social welfare dividend pitch, because I think it's a terrible pitch, right? I would say, obviously, you guys all know, during the 2024 election, I was for Trump. I wasn't for Kamala Harris, right? But I think I'm a pretty fair guy. I think this, I call the nonsense out on both sides. I think this is a really bad idea. So Doge, I think, just needs to be steadfast in actually focusing on just cutting costs and using that to pay off the debt, right? We don't need the $5,000 handout, okay, to make us feel good. We need you to pay off the debt. So if you save the money, which is not savings because it's our money, just pay down the debt, because the number one expense for 2026 is going to be interest on the debt. So we don't need $5,000. We just need them to pay down the debt. Any disagreements from that? Because maybe I'm wrong. This is just my opinion. When I say things on the broadcast, it doesn't mean I'm right. It's just my opinion. Deese's 5K would be great, but let's put it towards the debt. I mean, that's really the only thing I could think of, is that they're getting kind of a ton of blowback from this, so they're trying to get, buy-in from most people. MD says if the money was paid out in error, then put it back to where it belongs. Jose says it's a tax scheme. Dale says Elon needs to go away and Congress needs to do their jobs correctly. Dennis Kim says, isn't dividend basically a stimulus? That is of my opinion, right? If we get this Doge dividend where they give people $5,000, that's, it doesn't take an economist to, say that that's going to be stimulative to the economy. I mean, COVID, how much were the coronavirus checks? How much were the COVID checks? We got like 2 checks of $1,200 or something. But the problem is that was extremely inflationary, right? So we traded, right, maybe $4,000 in total for, I'm sure everybody's expenses in terms of their, food, in terms of their insurance, just day-to-day living expenses, energy, to heat the house, cool the house. That probably went up by more than your stimulus check from the government, right? So that's the thing. Whenever the government tries to do something to help, 9 times out of 10, it's going to do the exact opposite and kind of blow back in your face. I want to be GMO says the checks were not the inflationary policy. NYC native says it's $5,000 per household, not per person. Yeah, sorry, misspeak there. That is correct. This is Pershing Square. Jack says everyone stay home, and all of a sudden everyone has money. J. Mars says it was $1,400 and $600. Bart says the dividend should go towards Social Security. Someone says clean house and make the government smaller. Robert says folks can use the $5,000. Bobby B says I agree, but buying admiration is sometimes good when looking very long term. I mean, seeing the fruits of lower debt would be ideal. That's a good point. To think about it that way, maybe, to get the buy-in from the public so we can continue to do the Doge. I get it, but I just feel like that's our government being disingenuous to the people because, Trump knows that would be ridiculously inflationary and a bad idea. But perhaps, to your point, he's just using that to buy support, which I think maybe is an ethics issue, but we'll see. Brody says the Doge dividend would use savings from budget cuts, money already collected, while Biden's stimulus checks relied on borrowed funds, increasing the deficit. Well, so that's my point. They actually are both, right? It's both. Because you got to remember, the whole point, right? Again, we have to remember the framing, the way this was promised to the American people, the way this whole Doge thing, right, was promised to us is that we are going to use the Department of Government Efficiency to cut costs, to cut waste, to reduce the size of the government and pay down the debt. It's not to, reduce the size of government, cut costs, and then from that cost cutting, reappropriate those funds somewhere else. Right? That wasn't the way it was pitched initially. So my fear is that Congress and our politicians are like licking their chops with this and saying, wow, we saved $100 billion, now we can go and spend $100 billion on something else. It's like, no, that is not how this was promised to us, right? And this is, Republicans are all over this, right? So I'm calling them out too. You have a lot of Republicans saying, hey, we're cutting so much and we're saving so much money here, let's reappropriate that and spend it on something else. No, it's like, you're supposed to pay off the debt. That's how this was pitched. So that's kind of my issue, so to speak, with the situation. And I think to make matters worse, right, just as a quick review, I believe the headline CPI number for January came in at 3%. I think that was the headline number. So, inflation ticked up a little bit. And I highly doubt this Doge dividend is going to come to fruition, but you never know, right? We've seen more ridiculous things. That would be extremely inflationary. So I hope we don't do that for the sake of the American people. All right, everyone, here we are outside of the beautiful Chrysler building here. Anyway, not to be too negative on that, I am very optimistic and very impressed by the concept of Doge and what they've done already, but I think things can get a little bit squirrely. Dennis Kim says, Tom, how was Korea? Korea was awesome. I had a really good time. Really fun, long flight. It's about 15 hours. It's about 15 and a half hours to Incheon Airport, and about 13 hours coming back. So a very, very long flight. The jet lag is not bad going there for some reason, but the jet lag coming back, I'm still trying to recover from it. It's weird. I don't know why, but coming back, I got a little bit worse. Now, I was in Korea this summer, so I got to see what Korea was like in the summer. which is very, very hot and humid. And now I also got to see what Korea is like in the winter, and man, is it cold in South Korea in the winter. It was snowing almost every day. It wasn't quite as cold as New York, but it was cold. It was cold there. Someone says recession incoming. Robert says people have been screaming recession forever. I was watching this interview. I can't remember. I'm going to have to tell you who the guy is later because I forget. Anyway, there was this guy, I was watching this podcast, and he was talking about, his big claim, right? Everyone always calls for a recession. It's going to be the next 2008. It's going to be a big, fallout. The U.S. economy is going to crater, yet it's done the exact opposite. I'll cut right to the chase. He says the U.S. is never going to have a recession again. And his thesis, again, this isn't mine, this is his, and I have to get his name, but he makes a compelling argument, and the argument is as follows. The American economy is not a manufacturing economy. It's a very services-heavy economy. About 70% is services, right? So tech-based, right? Software-based, right? Not really manufacturing trinkets and the like, which has insulated us, so to speak, from those recessions, right? Everything is kind of subscription-based. Everything is, what's the word? Like telco-based, predictable revenues. So being that we made that major shift, the economy is always very, very stable and robust and growing because we are very focused on the services. It was an interesting kind of conversation. I think he was on the Compound podcast. But just interesting thought. But we're now walking by the old Pfizer headquarters. This is going to be the largest office to apartment conversion in the city's history and in U.S. history. Right here, Pfizer World Center. Pretty cool. Now, I will say this in terms of a little bit of a downturn. Tomorrow, we are going to get some data from the National Association of Realtors. We're going to get existing home sales data tomorrow. And for 2024, we've had the lowest amount of existing home sales since 1995, the year I was born. So things are really, really tough out there. It's not a liquid market at all. And you're now starting to see some of that pressure seep into new home builds like Pulte Group, KB Home and the like. So I think ticker symbol PHM is Pulte. That stock is now really broken bad. If you just look at the Home Builders Index, right, the Home Builders ETF, go down and do a line item of every single name, right? And it is pretty glaring that home builders are in a steep correction. All of them are trading below the 50 and the 200-day moving average. So perhaps next quarter, we're going to start to see perhaps some steep discounts on new homes as these home builders try to move some inventory. It says I'm in Jersey. Houses are still getting multiple offers. Yeah, I'm not saying there's going to be a crash at all. I actually think quite the opposite. My whole thing with housing is the following, and I think I've stated my, not argument about it, but my thesis about it. I really do believe that the people that are comparing this market, right, and calling for another '08 are just, they don't really know what they're talking about. They're just clickbaiters, right? They just have these titles and they just kind of talk nonsense. They don't have nothing based in data and fact. Now, the cause of the financial crisis was a lot of subprime debt out there, right? A lot of people who had no business buying homes bought a lot of homes and defaulted on their debt, which led to massive foreclosures. Right now in the United States, people have record amounts of equity in their homes. And we have about 40% of homeowners with 100% equity. So it's very difficult to default on a mortgage that you don't have, right? It's a very, very different environment. And one of the things that was a positive that came out of the 2008 financial crisis was underwriting standards improved significantly across the board. So you really don't have a lot of subprime out there, and you don't have a lot of adjustables. You don't have a lot of ARMs, right? Very, very few. So a lot of people who do have debt outstanding or who do have a mortgage have rock bottom interest rates. They have 3%. They have free money essentially, right? I mean, if you want to go to the bank and get a 30-year fixed right now, you're going to pay a 7 handle. You're going to pay over 7%. But most people who have a mortgage right now have 3% interest, right? So use that logic, right? A record amount of people have no debt at all, right? 100% equity, right? Very well capitalized. And then you have, I think, over 80% of all the mortgage debt outstanding is at 3% or less, which means it's very, very manageable for people and there's no incentive to move, okay? So there's no catalyst for, a 40%, 50% price decline like many of these kind of clickbaiters are calling for. If anything, you'll probably have more of the same. You'll have a less liquid market. You'll have a very thin market, right? As we just got done explaining, 2024 was the slowest year for existing home sales since 1995. There's just not a lot of transactions being done. Because if I'm in a home and my monthly payment's $2,500 for a 4-bedroom home, and if I sell my home, I'm probably going to be able to get into a maybe moderately better home, and my mortgage payment is probably going to be, maybe a third higher, maybe double. So there's no incentive for me to move. So if I get lowball offers, I'm not going to accept these lowball offers. I've worked with clients, especially in New York City, really rich people. They're like, I'll sell my apartment in Tribeca. I want to list it at $4 million. I'll give you the listing if you list it at $4 million. I'm like, well, it's not going to sell for $4 million. It'll sell for 3.5. It's not going to sell for 4. They're like, well, then we'll take it off the market and then we'll figure it out. But if I don't get 4, I'm not in a rush to sell it. I own it outright. I have a place in Miami. I have a place in Colorado. I just really don't need to sell it. So people, especially in big cities, not all the time, by the way, right? But most of the time in Manhattan, these people don't need to fire sale their real estate to you. They know that it's probably worth less than what they paid for. But honestly, in Manhattan, some of these people are so rich, they don't need to fire sale it to you. They'll rent it out. They can pay the common charges. They could float, the $30,000 a year property tax. So if they don't get their number, they're not going to budge because they don't have to. It's a very interesting market. Now, where I say you can probably get the most deals in New York City is in co-ops, because we're going through a few things in New York and globally, quite obviously. You're going to see the biggest wealth transfer to the millennial generation inheriting trillions of dollars. And millennials want experiences. They prioritize experiences and lifestyle. So they don't want to live in a co-op with a bunch of rules and there's no amenities, right? They want to live in a really nice condo building with swimming pools, spas, saunas, dog spas. We just talked about that, whole trend of, people treating their pets like humans. That's the trend. So you're seeing a lot of weakness on the Upper East Side in terms of co-ops. And you're seeing a lot of strength in condos with all these fancy amenities, because that's what a lot of people want. It's a very interesting shift in the market, because old New York was really, if you had a co-op on the Upper East Side, that was like the dream. You wanted, to have that exclusive, beautiful, pre-war co-op on the Upper East. You didn't want to have, a ritzy, glitzy skyscraper in Midtown with a pool. But that's what a lot of the young kids want now. Hey, what's up, Esmeralda? Good to see you. I see Jack is here. Welcome. Let's cross the street here and try to get warm inside. So honestly, some of those co-ops are really beautiful, like Sutton Place. So if you're just looking for a nice place to stay and you don't really need all these amenities, you can get some really good deals. I've been seeing stuff, $950 a foot, $1,000 a foot, pretty cheap. Now here's the thing that really gets you in New York City. The maintenance is very, very high. And it's only going to go higher, particularly on a lot of these older buildings. I mean, I'm seeing some deals where the maintenance, on a $2 million property is like $5,000 a month. It's crazy. Who Dat Dave's is correct. The maintenance fees are ridiculous in New York City. Dave, some of the stuff that I'm seeing is just so nuts. And that's really impacting valuations too, sometimes. If you see that you get an attractive deal, right, I'm using air quotes. I mean, maintenance is crazy. Really, really crazy. Did anybody hear, I'm not sure if this is a rumor, I don't know if there's any truth to this, but did anybody see that in the state of Florida, Governor Ron DeSantis is, he wants to get rid of property taxes entirely? I haven't had a lot of time to look into this. I don't know if this is a hoax or not. So anybody in the audience, anybody heard about that? Somebody sent me an article, and Governor Ron DeSantis says he wants to eliminate property taxes in the state of Florida. I don't know if that's even like a real thing or not, but hopefully it's true, because my property taxes are almost like $8,000 now. Anyway, let's do a lap around Grand Central Station. Mark Francis isn't replace it with sales tax. I don't know. I really don't even know what they would do, to be honest. I haven't had enough time to look into it. I would assume they would have to offset it with something. Now, that is one reason why people are leaving Florida, is because of the very high property taxes. The same thing with Texas, right? It is true that the state of Florida doesn't have any state income tax, but the property taxes are pretty high. And it's the same thing in Texas, right? So you don't pay any state income tax in Texas, but the state of Texas has crazy high property taxes. So aviating says heavily tax tourism to compensate. Maybe. Ben says, I am in Florida and I've heard nothing. Check it out. Google Ron DeSantis property taxes. It was a Bloomberg article, but I haven't had time to look into it. Anyway, if you guys have enjoyed the live stream today, feel free to leave a like on the video and click the subscribe button if you're new. But I think I'll end it a little bit early tonight because it is just brutally cold outside. So we will see you all tomorrow starting at 8:45. It's really good to be back. It's good to see everybody. It's good to talk to all of you. Hopefully you've had a wonderful, wonderful February so far. And we'll meet again here at 8:45 tomorrow on Friday. So Dale, thank you. Steve Marino, Mohammed, James Bond, NBA Elias, Professor Dario, Bo, Bobby, Leslie, Scott, Bart. Thanks, everyone. Good to be back in New York. See you tomorrow. Take care.